Welcome back to The Bottom Line, where we dive deep into the factors that can impact your bottom line. I'm Ashley Resticus of the S1.EP and your host for today's episode. Today, we're diving deep into the world of small business financing, uncovering essential strategies to help your business thrive. Let's start with the basics. Before you even think about securing financing, you need to understand the fundamental aspects of small business financing. Get comfortable with terms like debt financing, equity financing, credit scores, and interest rates. Assess your financial standing and projections to determine the best approach for your business. Financial literacy is key. Let's demystify some common terms to help you build a solid foundation for navigating the financial landscape.
Here are a few common financial terms. For a full list of financial terms, I recommend heading over to our blog post. The first term is assets. An asset is something valuable that you own and can turn into money. It can be physical, like houses or cars, or non-physical, like stocks or ideas. Knowing your assets helps you check your financial well-being and make future plans. The second term is liabilities. Liabilities are the money responsibilities or debts you have. They can include things like loans, mortgages, or any money you owe. Handling your liabilities well is important for keeping a good financial balance and avoiding money stress. The third term is interest rate. The interest rate is how much it costs to borrow money, usually shown as a percentage of the total borrowed amount. It's important for loans, credit card balances, and mortgages, as it decides how much you'll pay back in total. The interest rate affects your monthly payments, so it's a big factor to consider when borrowing money. The fourth term is collateral. Collateral is something valuable that you give to the lender to guarantee you'll pay back the loan. If you can't repay the loan, the lender can take the collateral to get back the money. Examples of collateral include things like houses, cars, or other important things you own. Knowing about collateral is crucial, particularly when dealing with loans that need you to offer something valuable. The fifth term is equity. Equity is what's left of an asset after you subtract what you owe for it. In simpler words, it's what you'd get if you sold the asset and paid off any debts related to it. Knowing your equity helps you figure out how much your assets are really worth and where you stand financially. And the last term is term. The term is how long you've agreed to take to pay back the money, shown in months or years. Knowing the loan term is important because it decides how much you'll pay each month and the total interest you'll pay over the whole loan period. Shorter terms mean higher monthly payments, but less interest overall, while longer terms mean lower monthly payments, but more interest overall.
When it comes to small business financing, there are two main avenues: debt financing and equity financing. For debt financing, you can opt for small business loans or business lines of credit, each catering to specific needs. With equity financing, consider angel investors, venture capital, or even crowdfunding to infuse capital in exchange for ownership or convertible debt.
Imagine you're planning a big party, but need some extra cash to make it happen. You have two main options. You can borrow money from a friend or family member, or you can offer them a share in the party in exchange for their contribution. Borrowing money from a friend or family member is similar to debt financing. You have to pay back the money you borrowed, usually with some extra amount, like interest, as a token of appreciation for their help. Offering your friend or family member a share in the party is like equity financing. Instead of paying the money back, you're giving them a stake in the event, and they might get a share of the profit or have a say in how the party is organized.
Now let's talk about the heartbeat of financial health, your credit score. In Canada, it's a crucial component for your financial well-being. So what is it? It's a 3-digit number that represents your creditworthiness, influencing your ability to secure loans, credit cards, and even certain job opportunities. Factors like payment history, credit utilization, and types of credit used affect your score. Remember, a good credit card score can open doors to various financial opportunities.
Just like the reputation you have among your friends or family determines whether they'll lend you money or not, your credit score determines whether financial institutions will lend you money or give you a credit card. If you have a good track record of paying back borrowed money or debts on time, you have a higher credit score, making it easier for you to borrow in the future.
Once you've decided on the type of financing that suits your business, it's time to navigate the application process. Prepare a comprehensive business plan and relevant documents to impress potential lenders or investors. Pay attention to specific requirements and deadlines and make sure you meet all the criteria. Securing the right financing is crucial for your business's sustained growth and success.
Similar to how you would need to convince your friend or family member to lend you money or share in the party, you'd need to prepare a convincing case, or in this case, a comprehensive business plan, to impress lenders or investors. You would also need to meet specific requirements, just like how you'd have to fulfill any conditions your friend might have for lending you money.
By understanding the nuances of different financing options, strategically navigating the application process, and staying informed about the latest financial trends, you can position your small business for long-term financial stability and prosperity. Remember, embracing a comprehensive approach to small business financing is key. Thanks for joining me, and remember, we're here to help you maximize your bottom line and achieve financial success. If you have any questions or need more information, don't hesitate to reach out. Stay tuned for our next episode where we'll explore another crucial aspect of business profitability. Until next time, make every financial decision count. This is Ashley Rusticas, signing off from the bottom line.